We are glad to have you with us, sir.
The pleasure is all mine. Thanks so much for the warm introduction. Hi, everyone. As the introduction was made, I'm Darshan, one of the co-founders of Vauld. We are a crypto lending and trading platform out of Singapore and India. We're about 4 years old, and we're customer facing. We have customers from 190 countries, so we're global. And we're venture capital backed. We've raised a couple of rounds. We raised our Series A from Peter Thiel's Valar Ventures in July of 21. And before that, we raised from Pantera Capital and Coinbase as well. We're about a 130-member team today, looking to expand to hopefully 350 by the end of this year. So trying to grow as quickly as we can and keep up with the rapid innovation of the crypto world. I understand that there's a structure to the conversation. So is this going to be a Q&A or how's that going to work?
It's mostly going to be a Q&A with you, sir.
Perfect.
Yes. Okay, so it's so great to have you here, sir. I think we can move on to the first question of the evening. It can be agreed upon that the academic curriculum and rich culture it BITS adds a lot of value to any individual's personal growth. What all clubs, departments, or projects were you passionate about back in your college days?
So I participated in a bunch of off-academic. I was a part of a bunch of clubs. I was a part of the basketball team. I was part of the debating club, if I remember. I was a part of the Department of Theatre. I was part of the RC club. I was, of course, part of, but my most fond memories was with Baha. I was the head of chassis design for Baha, I think in 2013 and 2014. And I see my learning through BITS primarily being enabled because of the fact that we had a tremendous amount of flexibility in how we decided to do whatever we could. And that, in fact, forced people of my batch to really think about what they wanted to do with their time, because you can only sleep, eat, and hang out for so much time. I mean, you can try to do that for 24 hours, but after a while, it gets a little boring. So what I saw most people do is truly introspect and explore what they're really interested in. And I got to explore building a car. I built a quadcopter. I built a plane. I built a bot for RoboWars. I had a lot of fun, and of course I've made some of my closest friends in BITS. Simran, you're on mute.
That was, yeah. So that was really interesting to know, sir. As a first year, right, I can only imagine how much fun your college life was, and I am too looking forward to BITS. And so that's quite a stellar profile, sir. Moving on to the next question. Given that you come from a long line of financiers, how did that shape your understanding about the investment industry and finance in general?
So that helped quite a bit. Through my childhood, dinner table conversation was around investing, evaluating sound businesses, what makes good business decisions and what doesn't. So for my own detriment, I decided to stay away from finance for a bit by going to boarding school, and then in turn getting to go through the whole IIT JEE BITS prep, then go through the whole BITS experience. And of course, in hindsight, it worked out really, really well. But that I almost grew up with that being the topic of conversation when we were idle, that being the topic of conversation when we're spending a weekend with extended family, talking about interesting business ideas, talking about interesting companies, talking about interesting ways to finance a particular a project, whatever that may look like. So it was pretty crucial, but I don't see any reason why that that background can hold you back, because at the age of 18 or 19 or 20, you can really pick up anything. At the time, I had a strong affinity towards math, which is why I got into engineering in the first place. But quickly realized I didn't want to stick to engineering, and hence dug deep on what other interesting avenues of math exist, and that's when finance. I got to explore finance by myself without the nurture aspect of it. So it was fantastic, and given the amount of time and flexibility you have at BITS, it's very, very doable to get into any industry that you may choose.
Really enjoyed your wisdom-packed answer there, sir. That's quite a journey that you've had. I think we can move on to the next question. I think all of us here are quite eager to hear how you found your calling in the blockchain. Would love to listen to your journey of founding Vauld and building that product.
Sure. So it took me about 2.5 years to get into finance. After I realized I didn't want to build a career in engineering, completed a couple levels of CFA, interned at a private equity fund, and then converted that to a full-time opportunity. And it took me about 6 months to get out of it. When I graduated, I was 22 at the time, very idealistic. I saw capital as a significant driver of positive change. It was one of the key levers of leverage over the past 100 years or so. Of course, the other elements of leverage being labor and technology and automation of sorts. So I didn't see any of that in the traditional financial world. And that really disturbed me. I mean, I got into thinking that, okay, I have my whole career ahead of me, but all I saw is more of the same that you would expect from someone building and really investing to line their pockets as opposed to look at the impact that they would create. And this was really an elite fund. I mean, it was the top of the food chain from a financial perspective. So I was quite unhappy once I got in. Decided to step away, work at an early stage startup, all the while closely monitoring where disruption in finance is really happening. I knew I didn't want to be part of the incumbents then. And that's when I found or discovered Bitcoin from some of my friends. I initially dismissed it as this noisy, speculative asset. But then it kept coming back to me by the smartest people I knew who kept bringing up, hey, I know you like finance. I know this is what you want to do. Why don't you check out what's happening in the crypto world? It wasn't rebranded to Web3 at the time. So decided to spend a weekend reading about Bitcoin. That weekend became a week, which became a month, which became a sabbatical, which became me deciding to do this full time.
It was very impromptu, your decision to try.
Oh, for sure. I mean, it really resonated. So that's, and you know, that looking inwards and finding that passion, along with aligning what you want to do, what can create outsized impact, not just for yourself, but also for the broader industry. It was a perfect fit for that in that manner.
Yeah, so like I get the gist you had like when you were in your college days, and like those were some very invaluable thoughts. Someone like who has such a deep knowledge of finance, and so it was amazing to like see you aligning with the blockchain and with finance. Moving on to our next section of our discussion about the current scenario in crypto in India. So, sir, since the launch of Vault in 2018, it has undergone a lot of dynamic changes, listening to the inputs and the needs of the customers. Could you tell us more about your initial vision for Vault and how it has evolved over the years?
Sure. My initial vision was really simple. I wanted to bank with Bitcoin because I thought it was just a fantastic asset to accumulate wealth in over the mid to long term. What I saw as a customer was all these platforms driving speculation. And I wasn't an active trader. I don't look at trading view charts. I don't look at technical analysis. I didn't do any of that, right? I mean, you don't learn any of that in private equity. You learn how to understand the underlying value of a business or a market, and predict where growth would look like, looking at macro and microeconomic trends. So I saw all the right things going for this asset being a store of value or reserve from a wealth accumulation standpoint. But I just saw a complete disconnect with the asset from the platforms pushing the asset. So the platforms are pushing speculation. They were pushing, try the 50th or the 100th most popular cryptocurrency. And back then they were, I think about 500 cryptocurrencies, not too many. I think now we're looking at over 15,000 listed. But out of 500, the 100th most was not a good, it was by no means a good investment. So, I mean, there was a disconnect of incentives there, and I didn't see anyone help me accumulate wealth in crypto, and I thought that was an opportunity. So Vauld really started with the ambition or mission rather to accelerate the transition to decentralized money. And if we are to build, if we are to help people enable and build wealth in this asset, we felt that the right first offering was to build a credit market, because I wanted to compound my Bitcoin holding. That's essentially what I was looking for. And so we built a credit market where I was the first lender to that credit market, and we deployed that capital to borrowers who wanted to borrow Bitcoin and these other cryptocurrencies. They would pay a certain rate of return, and most of it would be passed back to the customer. We translated an Excel sheet to an MVP, to a product, and then raised around from there. So I mean, it was identified through me wanting to use it as the first customer.
So that's very different from what actually happens in Bitcoin and cryptocurrency, the world. It's something very new, I think. It's a problem statement that you found, and then you've worked on that. So I think that's very innovative, I think. Moving on to the next question. How does Vauld negate the need for government acceptance and adoption of cryptocurrency as a legal tender in conducting their operations and convincing people, especially in a country like India, where almost completely conventional banking and interests go hand in hand?
Sure. So it's a very different answer if you remove the India aspect of that question. And that's the problem statement I'm most passionate about. I think the blockchain does not recognize geography as a parameter. And nor should money, in my perspective. I mean, the internet does not recognize geography as a parameter, right? It doesn't matter. Google.com, maybe not Google because it's personalized, but DuckDuckGo or any other search engine gives you the same results irrespective of where you're sitting. You get the same functionality of Facebook, as an example, irrespective of where you're based. If you have a PayPal account, irrespective of the country you're out of, you can essentially, within that closed network, settle transactions. And money doesn't work like the way the Web2 companies work. Money doesn't work like Facebook. It's very fragmented based on the country, and it doesn't have to be. It's primarily done so because it was designed many decades before the internet revolution, and hence each local government ended up building regulation to protect the end customer in their own way. So that's why it's as fragmented as it is. Now, there are, of course, networks to connect these monetary systems, but they're not very efficient. So if you were to make an international wire transfer, it could take anywhere between 2 to 8 days. It could charge you anywhere, but it could cost you anywhere between 2 to 2-digit percent, maybe 12% if you're sending it to Africa. And it could be very, you could significantly lose the money. So let's say if you're remitting money through Western Union, there are local bandits that sit out of a Western Union office to essentially hold you ransom immediately once you come out. So depends on which aspect of the financial system you're really trying to disrupt. But in India, coming to the aspect of India here, we think domestic transfers and money storage in the underlying rupee is very good. UPI is free, UPI is instant. If not instant, I mean, IMPS is instant for a transaction up to 5 lakh rupees now. So it's really good. I mean, how do you compete with free and instant, right? So for that use case, you're not going to see cryptocurrencies really come in. But there are very, very interesting applications for cryptocurrencies that don't cover the microtransaction within a geography. A classic example, as I mentioned, is cross-border remittance. Very expensive, very real time delays, and significant risk because somebody can plop you on the head once you walk out of a Western Union, depending on which country. So that's just one example. Pick another example. If you're in India, you are subject to the inflation risk of the INR, of the Indian rupee, irrespective of whether you want to hedge or not. Outside of buying real estate or gold, your options are very limited, and even real estate tends to get decimated as a market if your underlying currency goes through medium to high inflation. Now, you may think that's exceedingly rare, while I'm in my late 20s, you are in your late teens to early 20s. It may not feel very probable, but if you take a strictly data approach to this, if you look at okay, the last 25 years, there are 200 countries ballpark. How many countries have entered medium to high inflation? And I'm defining that by currency inflation rate of over 15% on an annualized basis. You'd be surprised. The number is actually like 30%. 30% of the countries in the last 25 years have gone through medium to high inflation for at least 1 year. If you extend that timeline to 50 years, which is most of our working career, right? If you extend that timeline to 50 years, it's over 50% of the countries go through medium to high inflation for at least 1 year, which means the underlying assets are not fundamentally sound stores of value. And the classic store of value is gold. So one way to look at asset appreciation is looking at the gold value versus rupee. And you see that it's more or less gone up over time. You may think that gold has gotten more valuable. That's actually not the case. The rupee has gotten less valuable. So, and you may think the stock market is a good investment, but you're actually denominating the stock market in rupees. So if, let's say, the rupee weakens and the stock market stays the same in terms of its GDP or value, however you may define that, the stock market tends to look like it's appreciating, right? So if you peg the stock market versus gold, which is essentially not it's not a manipulatable high inflation asset, you'll see that not just in India, but most equities markets have stayed more or less flat for about 40 years, which tells me that, okay, versus gold, the stock market is not a way to beat inflation. It's not a way to accumulate wealth. So what is? Okay, real estate historically has been, but you're still subject to the risk of hyperinflation. And that's where Bitcoin comes in, right? The best system is one where you don't have to trust anyone, because the second you have to trust someone, there is a perverse incentive to try to manipulate that, especially if they're not the same person. So the customers are different from the regulators. The savers are different from the people holding power. The people holding power are the central banks and the elected representatives. And the savers are the people who vote them in power. They're different. They're fundamentally different with different incentives. So the aspect of truly hedging against bad monetary and fiscal policy while maintaining custody in a digital space for the first time is enabled through crypto. Now, you could do that in the analog world through gold, which is why historically Indians have saved in gold. It's not just that it's really good to look at, it's aesthetic. That's almost institutionalized because it's historically been a fantastic store of value. That combined with true self-custody in the digital world is what crypto truly brings to the table. And I don't see I don't see the momentum of crypto adoption stopping because of everything that it brings.
Mm-hmm. So, like, that was indeed a very fresh take over things, and I guess most of us will keep those points in mind. And your answers certainly cleared a lot of the doubts that we had for situation about India and about creating wealth in general. So, I guess we can move on to our next question. The mooted a 30% tax on virtual digital assets can expect a large number of cryptocurrency users to bail out in the face of uncertainty. This quite seems contrary to the invest ecosystem, which relies on a long term game. So, what are your views regarding that?
So taxes are negative externalities in a free market. The larger that negative externality, the more something called a deadweight loss exists. Again, you guys are not in finance or economics, so I apologize for that. But what that essentially means is you can't simply say, oh, okay, the total transaction volume is 100 rupees. If I add a 30% tax, I'll get 30 rupees, you get 70 rupees. That's just not how this works. The negative externality means if you add that aspect to the free market, the total volume does not stay at 100, it actually reduces. And because it reduces, you don't end up capturing 30%. You actually capture, as the government, capture a smaller piece. And that loss of, so let's say that's 27 rupees, right? As an example. So the revenue could be 27, could be anything else. It depends on the supply and demand curve of that. But whatever that loss between theoretical flat tax rate versus what actually is captured is called a deadweight loss. Now, the larger the externality, the larger the deadweight loss, obviously. Now, 30% is steep. There's no doubt about that, whose short-term implications could mean trading volume disappears. But when you factor in tax rates, you really have to put in mind what is the net gain going to be after tax. That's really how you evaluate the investment quality, right? I mean, it's after the externality. So earlier in crypto, the externality was not clear. Now it is. So when you're making a decision versus, okay, I have a long career ahead, so I may want to spread my investments across safe, medium, and high risk assets. When you look at the appreciation, you have to factor in something like short and long term capital gains tax. Now, even once you factor that in, you have an expected rate of return post tax. I believe that even post tax, over the next 5 years, cryptocurrencies are going to be by far the best asset class to invest in. Now, that doesn't mean that every asset is going to perform incredibly well, but the assets that are fundamentally sound, be it Bitcoin, Ethereum, Solana, and any of the maybe top 7 to 10, I believe is going to, even with that 30% tax, is going to be far better than potentially real estate, better than gold, better than equities, better than debt instruments, better than anything else. So it is an externality, a negative one, and that's completely fine. But data tells us that sure, it's something that people would rather not pay, but it's not deterring people from investing it, because when this asset doubles, does it matter whether your tax rate is 10% or 30%? It really does not. People are equally excited about getting it. And how many times has it doubled over the last 24 months? I can't even count. Simran, you're on mute.
That's a really interesting standpoint that you put down there, that despite whatever we make, there will be taxing, and it doesn't matter at the end of the day because you're going to make those profits. And so I think that's a good point. Okay, let's move on to the next question. Open banking and decentralized finance are two emerging trends we have seen in the fintech world, with multiple traditional banking institutions, especially in Southeast Asia and the USA, utilizing open finance APIs for a much more transparent system. Where do you feel DeFi beats open banking, and which is the trend which would emerge victorious in the next few years?
So open banking is not truly open. Open banking is permissioned. And what that essentially means is, theoretically, there are APIs that meet a certain standard from which you can use and build products. Now, to get access to those APIs, you need to be a license holder. For example, if let's say you want to build a UPI interface app like Google Pay or Phone Pay, you have to have this license called an NBFC aggregator license. Similarly, there is a payment service provider license in the UK. There's a payment service provider, small payment institution license in Singapore, and there is a money transmitter license in the US. Take a guess on how much any of these licenses cost. Maybe for entertainment's sake.
Maybe someone in the audience can answer that. I think my take would be, I think it doesn't cost anything.
Okay, that's not accurate. It's not in lakhs. It's in crores, and it's multiple crores. So the money transmitter license in the US for all 50 states costs anywhere between $3 to $5 million. We're 15 months into the process, so we know. The small payment institution license in Singapore has a minimum capital requirement of $1 million, and additionally requires roughly 12 months invested and $200,000 invested. So 1.5 crores ballpark. In India, an NBFC aggregator license, minimum capital requirement is 50 lakhs, but you can expect another 20 to 50 lakhs in lawyer fees, and a big if. It's not guaranteed. So whether you'll get that license. So that's what I mean when it's permissioned and the barriers of entries are. So what I mean by permission is, before you can do anything with these APIs, you have to go to the regulator. You can say, please, can I do this? They'll judge you based on your worthiness, and they may or may not approve you. And more often than not, they don't approve people, especially in a country like India. In many countries, as long as you meet the threshold, you get approved. So Singapore being a classic example, UK being a classic example, US being a classic example. In India, on the other hand, the RBI has something called quotas. So they've decided before the year begins that they're going to give 3 licenses. Now, you're essentially competing for those 3 licenses against people in their 40s who've been in banks for decades. So when they look at you as a 20-something, and they look at someone who stayed in the bank, who's basically had beating from the RBI for 20 years on what you can and can't do and how you can think. It's not truly open in any sense. Once you have a license, sure, you can build some stuff. Crypto, on the other hand, is completely different. It's truly permissionless. Today in your dormitory, if you are going through your C++ courses, which I hope you are, you can post your course completion. I'm sure you guys studied it in 11th and 12th as well. You can actually start learning Solidity and build a lending platform that can scale to tens of billions of dollars in assets under management. And this is not hypothetical. There's this company called Instadap, where there were 2 founders. They were brothers of 17 and 18 years old. They started building a decentralized lending protocol called Instadap. It was an aggregator. And they dropped out of college to post their seed round. They raised from Naval Ravikant. They raised from Pantera Capital. They raised from Balaji Srinivasan. Very, very reputable names. And they have anywhere between 12 to $15 billion in assets under management right now. So they're effectively billionaires, both of them. And I think both of them have not crossed 21. So they could have never done this in open banking. It's just not possible.
Yes, sir. Like that brought in some very fresh perspective for all of us. And I think the examples that you used help us understand the core concepts behind open banking and DeFi. Even at campus, the Solidity community has become really strong nowadays. Yeah. So moving on, sir, do you feel that there is a scope of seeking interest through cryptocurrency to overtake the conventional banking? If yes, how would you see the transformation taking place beyond the virtual world?
So, I mean, how many of us actually interact with money except in the digital world? I don't remember the last time I did. And when you say the virtual world, I mean, in, if you think about how much time you spent on the internet today, over the last, let's say, 1 month, versus how much time you spent on the internet 5 years ago, it's only increasing. So the virtual world is becoming more and more important to everyone's lives. We're just spending more time because they're better services. And clearly, there are substitutes in the virtual world that we would have otherwise had to be in the participate in the non-virtual world, right? Um, with 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 regards to money in particular, I mean, like, I don't, I materially don't have a difference if I use my crypto assets for payments versus if I use my bank account. In fact, I know for a fact that my bank account works from Monday to Friday. It does not make payments on Saturdays. I think the second and fourth Saturdays. It does not work on Sundays. If there's a bug on the app, uh, I may not have access to my funds. If their infrastructure is down, I may not have access to my funds. If I want anything but the standard offering, I'll have to wait weeks to months at a time to get access to that. And none of that exists in the crypto world. You like everything is instant. Everything is it's less mature, right? So there's no denying that. But the upside is like there are no work days, there are no work hours. There's no downtime. So like the experience is fundamentally like very different. In my experience, people will get crypto wallets before a bank account, and when they do apply for a bank account, they're going to wonder why this exists. If let's say the penetration is such that it can substitute many of the use cases. Now, with regards to lending and interest rates in particular, it's already very dominant. Just among stable coins, there's about $150 billion in stablecoins right now. 130 amongst the top two, which is Tether and USDC. It's very likely more than 150. It's probably 200 billion right now. People, instead of storing their dollars in their bank account, swap in for this asset called stablecoins, which replicate the price of the dollar. And they lend on these decentralized protocols. They lend on centralized platforms such as Vauld as well. And the interest rates are not comparable. So if you look at the interest rate that a Singapore bank would give you or a US bank would give you, it's 0 point something. In Europe, as an example, it's negative. They charge you for the privilege of leaving money with them. So compare that with 12, 13, 15%. And I mean, no wonder crypto is accelerating at the rate that it is.
I think then there's a lot of pros to banking in the crypto world. I mean, it's very flexible and it takes care of most of the problems that conventional banks face.
So I have to come out and also counteract that optimism with a certain base reality. In India, you cannot use crypto as legal tender, which means you're not allowed to settle transactions. So if you do so, you're not yet breaking the law, but you will be breaking the law once the law comes into effect. So don't do that in India. Just like making that disclosure. Do not break the law. It's not worth it. It's also, as I mentioned, it may not be economical to do microtransactions. It's also probably not at its current state as intuitive as it could be maybe in a few years' time. So I would not recommend like my grandfather or my elderly uncle to try to bank with this asset, because they want to go to a relationship, they want to call their relationship manager and they want to understand, they need a little handhold. and the crypto space does not offer that. So you have to look at which demographic it solves for. Someone who grew up on the internet, who had smartphones through their mid and high school, um, they're going to think banks are archaic, but it there's still a very significant place for the traditional banking network. And I think we're forgetting that most of the wealth tends to be with the older folks right now. So there's a tremendous incentive system to solve for that, ensuring that crypto is more usable for that demographic. That is not done yet. So I would not recommend, as mentioned, an elderly uncle or a grandparent to look at crypto as an alternate to banking. I, however, have no doubt that an 18-year-old will choose crypto to bank. Maybe not today, but in a 2-year timeline. Bank accounts would likely be how you receive a salary. Beyond that, microtransactions, possibly, as long as the chain is scalable, cross-border settlements, investments, play to earn, if that's a thing, all of that is going to be in the crypto world.
All right. Moving on to the next question. With a signpost towards the development of a metaverse internationally, what do you believe this means for the entire cryptocurrency ecosystem? And what other future prospects do Vauld have in mind in and beyond this crypto space?
Sure. It's really important to define what the metaverse is, because I think this word, since Facebook has rebranded, has been thrown around quite a bit. So the metaverse, depending on who you ask, could be either your representation in a digital world, but that has no difference from what, let's say, you could do on Fortnite 2 years ago, right? That's a narrow definition of what the metaverse really is. The metaverse is digital ownership and representation in the decentralized ecosystem that is Web3. That's what the metaverse really is. So if a Fortnite or a Facebook tells you they're building a metaverse, that's not what they're doing. They're trying to lock you in. Not sure how many history buffs we have here, but Microsoft tried to compete with the open internet. And the Mozilla Foundation, as well as the Netscape Navigator, really built HTTPS and the open internet to compete with the closed world of what Microsoft was trying to do. They were trying to build intranets. So think of DC, right? That's an intranet. That's what Microsoft was trying to build for the whole world. And that's what Facebook and the other companies are trying to do right now. But it's not that. It's the open, permissionless, incredible world. And just so you know, cryptocurrencies have a bad brand name associated with it. People tend to associate money laundering and lots of negative connotations towards crypto. So I think the space has done a fantastic job rebranding it to the Web3 world. It's the same thing. And the metaverse is part of the Web3 world. So the metaverse and crypto are going to grow together, because the metaverse has money and digital assets that is not money, so non-fungible tokens and the like, and you're interacting with some sort of spatial area with a combination of these two things. And the Web3 world, the crypto world, is basically the monetary aspect of that. That's it. So both sides are going to exist, just like how you have a bank account and your money can buy a lot of things and experiences. The metaverse will capture everything but money, and the crypto world will capture the money aspect of things.
Yes, sir. Like that was really enlightening that you have shed light on the current scenario that enraptures around these things. And yep, I guess our audience will take notes from it. Moving on, let us discuss the future of the ever evolving space for so much innovation and creativity that it encompasses. So, how do you see investment using cryptocurrency growing in the upcoming years? What are some trends that you believe we will see in 2022?
So, I think if you're So crypto is not a get rich quick asset class. Despite the marketing tone of some of the companies, that's not really what it is. It's a not get poor slowly asset class, which means it's a very efficient way to beat inflation, and inflation really eats through wealth over the mid to long term, thanks to compounding effects. Uh, if we're talking about a medium to long term timeline, maybe 3 to 5 years, it's going to be the best asset class because it's uncorrelated, it's disconnected from the inflationary world we live in. So it's going to do extremely well. You don't want to try to time the market because nobody knows where the day-to-day moves. It can move anywhere between 5 to 10% up or down. So you want to look at more traditional ways to get in, commonly known as SIPs, where you can average in your price of the asset. So it's called dollar cost averaging in the US, but it's very famously marketed as systematic investment plans in India. So what you want to do is ensure that you're putting a little money in over a consistent timeline such that you're ironing out the volatility of your buy, and you're really positioning yourself for success over the medium to long term. When you talk about a 1 year timeline, I mean, if you asked me at the beginning of 2021 whether the NFT world is going to be as prominent as it is, I would have never been able to guess that. I mean, it really caught me by surprise. So it's really tough to call where these things are moving. So I remember in 2017, the whole craze was in ICOs and there were scams all over the place. In 2020, basically 2018 to 2019 was more or less, it was referred as crypto winter. So not too much innovation, not too much capital entering, so not too much talent entering in as well. 2020 was the year we really saw decentralized finance pick up. And Vault was really well positioned to capture that. We were fortunate enough, because of our specific knowledge in finance and our interest in crypto, we called that a few years in advance, which is why Vault was built to cater to that requirement. That is truly what we do well. We're a combination of lending and trading at the same time, but 80% of our revenues is in the crypto lending business. So it's that passive investor looking to accumulate assets over time, and then on the other side, people looking for leverage. So that's really what Vault does, and that's our special sauce. I call that in 2020. 2021, just like, I don't get it. I mean, I'm very traditional in the finance space, right? I'm not. When I write something, I can't even understand my own handwriting. So to understand that the art market was going to take the crypto space from 10 million to 20 million customers in India was not something I could have called. But we saw the early trajectories for that. And in late 2021, early 2022, I'm seeing the same signals for decentralized autonomous organizations. So they're called DAOs, and they replace the traditional incorporation structure for operations and voting and the like. So instead of you needing to register under the Companies Act of India or registering a company in the US, you're registering companies through a contract in Web3 or the metaverse, and that DAO has the capability to hire, take decisions, fire, build products, pay taxes if that's applicable. All of that is built in. So I'm seeing what I saw in NFTs at the early stages in DAOs today.
All right, let's move to the next question. What advice would you give to students currently in college who aspire to enter this intersection of investment and cryptocurrency? Additionally, what are some tips, resources, or strategies you would recommend to everyone present here to get acquainted with this jumbled world of crypto?
Sure. So if I were you, I would look at where the smartest people are spending their time. And over the last 20 years, they've more or less been in the internet space. So, and the internet space is very broad, but because when we think about Web 1.0, it was really websites that didn't have a customer side input, but you could interact with the business in the online world. So think of website landing pages, think of information sources, think of yellow pages on the internet, right? So directories and the like. Think of Make My Trip, think of Amazon, where you can basically get some service through the interface of the internet. Web 2.0 really saw two-way interaction. You could read and write in the internet world. So we saw a tremendous amount of social media platforms come in, and we also saw trends around the internet world capture a lot more value in the physical world. So we saw aggregator businesses really come in. We saw companies like Uber and Airbnb completely disrupt highly regulated industries which are not known to be innovative at all. It's, short-term stays, long-term stays, and last mile transportation. These are protected through medallions in the US and licensed cab services in India, as an example. So a tremendous disruption that happened there. Web 3, on the other hand, is going to translate not just read and write, but it's going to be read, write, and own. So most of the value when you interacted with a brand like Uber was being accumulated by the Uber shareholders, because the valuation of those businesses went up because you were a customer. In the Web3 world, when you interact with these services, there's a token play somewhere there, either through governance or through the transaction layer. So a contract or a piece of software in layman's words typically has an underlying asset associated with that, a service. So think of Paytm and Paytm money, right? To use Paytm, you have to top up your Paytm wallet and you get Paytm money. Paytm money is pegged to one to the rupee, so it's fine. But these Web3 contracts are not pegged to anything.Ese tokens, underlying tokens, are not pegged to anything. So you can read, write, capture information, provide and interact with that too, and also own, and which means the upside is really captured by the end customer and not the people truly the people on the top. So it's much more democratic that way. It counteracts the income inequality and wealth inequality forces that we saw in the Web 2 world. And so in your position, I would definitely recommend learning how to code if you're a coder, or building hard value propositions to support an internet native business and a Web3 native business if you don't want to code. So that could be building capability around design. That could be building capability around product management. That could be building capability around people relations if you want to be part of the customer experience team. Building capability around business development, building capability around marketing, right? These are very tangible skill sets that complement the software, the coders, and every business needs to be built by getting access to hard skill sets across the board. So that's something that you can do. And with regards to learning about the crypto space, try to refrain from short form content as much as possible, because there's so much money floating around in crypto that you don't really know whether that the message that you're consuming has an underlying agenda or not. And I mean, given that I'd already graduated and been part of the financial world, I could clearly see that the message of short form content was not resonating with long-term wealth creation, if that's what they were promising. It wasn't. They were pushing influencers, as an example, were pushing projects that paid them to push them. So they were sponsored. And some influencers disclose this, some influencers don't. Similarly, token issuers, right? Similarly, DAOs and contracts. You don't know whether the messaging is adulterated almost with marketing money to change your perception ever so slightly. And to that end, you want to stick to the shorter the form of the content, the more likely the amount of consumption, and the more likely companies are investing to influence that message. So longer the form, the better. So avoid learning about stuff from Twitter, then avoid learning stuff from blogging websites or YouTube. YouTube could be a good teaser, but if you're listening to one influencer and they're promoting one platform or one service over another, it's clearly promoted. And pick up a book. Like, I know it's weird to say given that we live in the world of YouTube, but you want to read this book called The Internet of Money. You want to read this book called The Bitcoin Standard. These are probably the two best books to start reading, especially if you want to learn about crypto. And you don't want to consume short form content, especially because your opinions are not formed yet. Once you read the Bitcoin Standard and The Internet of Money, you could adopt that learning into looking into all the different tokens that exist, trying to understand what these tokens create, and then possibly see what people are talking about it. So read these books, go to a coin market cap or a website where you can just get the laundry list of all the tokens that exist and read about these tokens in the longest form content that you can.
Yeah, sir. Thank you so much. I guess that was really amazing and would have provided valuable insight to all our audience. Yes, sir. Moving on to the next question. If in some cataclysm all the knowledge about crypto and blockchain was destroyed, and only one short sentence could be passed down to the next generation, what would contain the most information in a few words?
Capitalism. If capitalism was destroyed.
No, I think she meant cataclysm.
No, sir.
Sorry?
Just like, sir. Yeah, sir. Like in an imaginary scenario, if you believe that all the information was destroyed.
That's a good question. All information was destroyed. I mean, if all information was destroyed, how could you learn about anything? We're back to
all information about crypto, blockchain, we never knew.
Oh, okay. Oh, sure. Okay.
As if we're assuming, back into the original world.
Yeah, assuming the original Bitcoin white paper still remains, that's a fantastic place to start, because the whole movement was started with one white paper through a technology innovation that didn't have externalities helping that. So think of the chip innovation, right? The chip innovation was predictable through Moore's law. Chips were getting efficient every 18 months. They were doubling in transistors, total transistors, because they were reducing in size. Crypto had no such externality. There was no predictability. So it was deep research of a cryptographic work that led to the creation of the blockchain and the distributed ledger technology. So if you lost all information, crypto disappears, because that means you're also assuming Bitcoin disappears. But if let's say you're wiping out everything that exists in the face of crypto today, you'll still need the Bitcoin white paper to exist for this space to exist. So, it's not the elegant answer that you were looking for, but if everything but the Bitcoin white paper is gone, read the Bitcoin white paper. If everything exists today and the Bitcoin white paper also does, read the Bitcoin white paper and read Internet of Money and the Bitcoin Standard.
Okay. I'm sure everyone must have derived great value from your thoughts and views. Well, that brings us to the end of our discussion here. I'd like to take a moment and thank Darshan sir for taking out time from his schedule to have such an enriching chat with us. It was a pleasure hosting you, and I'd also like to thank our audience for joining us this evening. We hope it was a great learning experience for all.
Thanks, everyone. It was really fun.
Thank you, sir.